Welcome to Between Data and Risk podcast. Today we'll talk about data use in banking with our guest Andrew Badstubner, CIO of First Community Mortgage. Stay tuned.
If you're a business owner or senior manager, you probably had more than enough about all the wonderful opportunities awaiting you in the era of digitalization.
Whether it is big data, cloud, data science, or whatever buzzword is currently trendy.
If you would like to hear someone dissecting these claims and showing you what it actually takes to improve business processes, you're in the right place.
This is Between Data and Risk, where we discuss real-life examples of what works and what doesn't in the world of business operations.
Hello, I'm Artur Cognition Shared Solutions Chief Risk and Strategy Officer, and with me is my co-host, your friendly neighborhood data guy, Dr. Marian.
Hello, everyone.
Welcome to this episode of Between Data and Risk. Today we'll take a look at the opportunities and risks presented by data science in financial institutions. We have with us Andrew Badstubner, Chief Information Officer at First Community Mortgage, who agreed to share some of his experiences with us. Hello, Andrew.
Hi, guys. Pleasure to be with you today.
Pleasure to have you with us.
Great. It's finally we have an episode with someone from a financial institution. I'm very, very keen on this discussion because my background is in finance. So let's start with a bit of introduction, Andrew. If you could give us a bit of background on what are your main focus areas in First Community Mortgage, and how you utilize data science. What's your view of data science in your institution?
Sure. At First Community Mortgage, a lot of our focus on data and data science is around optimization of the business. As you know, right now in the United States, the mortgage industry is contracting because the housing market is contracting. And so there's a lot of emphasis right now on making sure that we're running as efficiently as possible. And so we're using a lot of data to look at our operations, making sure that we're spending the right effort on things and that we're always getting more efficient. And we find ourselves looking more inward today in a period of contraction than we probably would in an expanding market, where we would be looking very heavily at like how do we expand sales and things like that. But we are trying to use data to expand our sales net as well.
So when you say looking inward, is it optimizing your processes, optimizing the usage of capital, this kind of what to do more with existing customer base, with existing resources?
Yeah, that's right. For example, your listeners in the United States will be familiar with buying a house is just this incredibly difficult process, right? And probably once you find your house, the hardest part is getting financing for that house. And it's just so onerous, the amount of data that needs to be collected. And there's an enormous amount of documents. And believe it or not, a lot of what is collected today is still document based, right? And so we get all these documents in, and these will be things like your bank statements, your credit scores, your credit reports, information about the house, and appraisal. All this stuff comes in different document formats, almost entirely unstructured data.
Does it come on paper, or at least it's a file?
So at least it's a file. Often it's someone took a picture of a document and uploaded it up. So it's like a step above paper, right? But
not much. Not much.
Yeah. Then there are some that are more advanced. Like for example, we can get credit reports using an API today.
Okay.
And we can do, in some cases, probably 50% of the time, we can work with our customers to automatically connect bank accounts so we can get some financial data using APIs. And wherever we can, obviously, we prefer to get the APIs. But in the end, there's a lot of data that we have to collect manually. And after we collect all this data, then we have to make a decision about whether or not we can underwrite the loan. And it's just a very, very difficult job for underwriters. And so getting back to your original question, like we are spending a lot of time trying to optimize that collection and flow of data, and then optimizing the time that underwriters spend analyzing that data so they can make the right decision. So then we can move on and write the loan. And it's a very complicated and very hairy problem today.
So when you encounter these opportunities that are present, that may be solved by applying data science, I come from, I've worked in big financial institutions. I've worked for Barclays, for Rabobank, for HSBC, and we've used data science, but very often the projects that were linked to data science had pretty big budgets and were more exploratory in terms of, let's see what we can do here. And the goals were Yes, Marian?
I need to interrupt you. I'm sorry. I would like to clarify. Are we talking about data science yet, or are we still talking about data engineering? Because, as you know, I'm pretty touchy when it comes to using the term data science. It's already watered down to homeopathic levels. So if I hear
but you've been telling me that data science is a science. It's about finding stuff. It's
not about structuring documents.
We took data. No. Yeah, we've been taking data and looking how we can improve the process by looking at this data and developing something that
we invited
works.
Andrew. Okay,
so
I appreciate.
I'm going to ask.
Okay,
I was going to ask. Quite a lot of money in these projects has gone into exploration, and a lot of them were abandoned before they led to a single iota of improvement in production. Having worked for smaller financial institutions, obviously, I expect you don't have that kind of luxury of frankly wasting a lot of money. So how do you approach this with a bit more practical?
Yeah, that's a good question. Let me say, I have worked at fintechs before where we did a lot of exploratory data analysis, right? In particular, where we were trying to use machine learning to determine like automated underwriting rules. Mm-hmm. These were for non-secured loans, and that was a lot of fun, And
it is always
fun, to have the money to go and do that. In today's environment, and especially working for a mortgage bank, we don't have that exploratory budget, right? So every dollar that we put in has to show a return today. So we have to be very, very choosy. And what we end up doing is we end up working a lot with partners, because what we're finding is that partners have the ability to aggregate those, they essentially are the aggregation of a lot of their clients' resources. And what we hope is that by working with partners, they can take the information from all of the clients like us, digest that information, make it a more viable product, and then bring the product back to us in a way that'll help move our business forward.
Actually, I used to work with a lot of startups. Some of them were in financial space, and one thing that we discussed with Artur before, I think, some of these partners using open banking, especially, how do you consider the risks related to cooperating with someone who is maybe not as heavily regulated as you are? Because it's nice and dandy that you get flashy charts and cool machine learning models, but I'm maybe too grumpy recently. But
recently,
how do you I'm thinking about our audience and people who operate with, and they are overflooded with dozens of, I guess you too, of proposals. We will do some machine learning for you. We have these wonderful tools. How do you see the golden nuggets, which are for sure there, from so-ish offers?
Yeah, it's a good observation. Let me give you an example to make your observation real, and then I'll use that same example to talk about how we solve the problem.
Mm-hmm.
So OCR today is a field that's fairly advanced for a lot of general use cases.
Mm-hmm.
For example, we have really good document recognition and indexing and extraction for things like driver's licenses, passports,
standardized document.
Bank statements from the top 6 banks, right? And we have for documents that we see a lot, it works pretty well. And so we get a lot of requests for business from imaging providers outside of the mortgage space.
Mm-hmm.
And here's another good example would be like AWS has an OCR platform that's very good generically, right? And Google has very, very good generically. They fall down once we get into the very specific domain of mortgages, especially residential mortgages. And what we find is that while they're good on those general documents, they're not very good at reading loan notes. They're not very good at reading titles and deeds, and they're not very good at reading a lot of the data that we need to be read and processed. And they're not even very good at reading a lot of the common data, but from uncommon sources. For example, bank statements that are outside of the top 6 banks.
The seventh.
Mm-hmm. The seventh. They're all different.
Who are we blaming right now?
Yeah. So what we find is that people will come and say, hey, we can do this really well. We have this great OCR technology. We have this great, and the latest thing that I'm seeing is we have this great OCR technology, and we're using AI to extract the data in a way that has never been extracted before. It makes a huge difference when that provider says, and we've been working in the mortgage industry for 10 years, and we have a huge library of mortgage-specific documents, right? And so we're always, in some ways, flirting with those at the edges of innovation in AI for processing, AI for decision-making, AI for image recognition and extraction. But that's where we're very exploratory, right? We're very exploratory in understanding what's going on in the market so that we can have our eyes on the horizon. But when it comes to really making a difference in the business, we have to rely on partners that have deep understanding of our domain. And I suspect that it's that way for many different kinds of highly regulated industries. It's probably that way in pharma, in other kinds of banking. It's probably that way in industrial gases, for example, and in other areas where there's very tight government regulations. There's going to be a very domain-specific set of AI tools.
Okay, so let's make a step. Okay, go.
Okay, we've stumbled kind of slightly away from data science and to a very interesting topic of data interoperability and data transmission, because I remember that back in 2002, I think it was, I worked a bit on exporting account data into standardized formats. And, I remember that it was pretty common functionality that banks could, you could download your account information, your account statement, not only in Excel CSV, which is pretty generic and pretty useless most of the time, but in standardized formats for account information. Now, I expect that there are providers who would be able to read those standard account interchange formats. But for example, your bank, when clients, when your customers want to get to their account, do they have the ability to download their account data in some standardized formats so they can, if they need to use them in downstream for whatever, can they access that information electronically and download it?
It can, yeah. We have a very narrow focus, and that, like, with us, they're only going to be looking at their mortgage, right? We don't cross sell into checking accounts and savings accounts and other kinds of loans. So our customers that are in the servicing phase where they're making payments, they can access their account data electronically if they need to.
It's interesting for me why most of the data that's input to you say that it's coming in either in paper formats or the next best thing, which is a photo of a paper.
Next worst.
Yeah, I'm just wondering why there isn't. What's the barrier to making the electronic data interchange a bit more common? Is it the problem that there are so many standards? Standards are wonderful. That's why we have so many of them in the data interchange space, or is it that customers simply don't know that they can download the information from one bank, upload it to another bank if they want to transfer this data, rather than photograph or run their bills through a scanner?
Yeah. It actually is a two-headed problem. So on the consumer side, you have services like Yodlee and Plaid and Finicity and a bunch of others, right? It's a very crowded space that will allow customers to connect to their bank accounts, and that will allow us to get the data over APIs. We find that about 35% of the customers that hit that page still are reluctant to go through that process because they're nervous about sharing their passwords. And there's a perception. We've done a good job as an industry of saying, hey, do not share your password. And so they say, hey, this is not my bank site, and they're asking for my bank password. That just makes me nervous. So I'm just going to take pictures of my bank statement. In some cases, they'll download the PDF version of their bank statement, which is a step above the camera, right? The other head of this monster is that we deal with so many different parties on the back end that, or even in the processing. We deal with a lot of investors that need data in certain formats, right? And then we deal with a lot of, let's just call them data providers along the way, that operate in an environment where there are no standards. For example, we have to get title information. That is controlled at a very local level. It's controlled at the town, at the county level. It's not controlled even at the state level, right? So we have to deal with all of the counties in the United States of America. All of them use different formats. All of them use, there's some overlap obviously in systems, right? Because I'm sure that there's vendors that service that industry, but they're all different. And the lack of standardization in the pieces of data that we need in order to make our decision is kind of complicates the problem exponentially.
Well, living in UK and having bought a house, I know that we have the land registry, and that's kind of making life a bit easier. Although I have to say only a tiny bit, because we still have quite a lot of legacy documents on yellow ink paper, and the deeds that I received for my house were literally on crumbling paper. But so now, from what Marian taught me, and everything I know about data science, he has taught me, unfortunately, which is why I don't know much. After the data has been transmitted, you need to clean it, you need to harmonize it. I wanted to ask you, once you actually receive that data, is it pretty easy to get the data into a structure that fits into your process, or is there still variety in the market where you have to kind of think about where the data actually fits into your preconception?
Well, there's a lot of variety, and that's why it's very human-based today. And there's a huge industry that has come up in terms of helping to standardize that variety, right? And that's why there's a lot of data science behind it. There's a lot of AI behind it in terms of that standardization process. Because in the end, you really want your underwriters, and like the perfect situation, you'd want your underwriters to be looking at a dashboard with like green and red checkboxes, right? Has income been verified? Is the collateral verified? And then we just go through all the regulations of what's necessary. And if we had the best system, which is mythical today, we would have just big green checkboxes, and the underwriter could drill in and they could verify it, right? And they could write loans very, very quickly.
You almost wouldn't need an underwriter, because if it's all green,
just the blue button or the green button and the red button, and green is
in a loosely regulated industry, you could do it without a human underwriter, right? You can't do that for residential mortgages in the United States because it's very, very tightly regulated, right? But like unsecured personal loans, you could do that for sure. Unsecured small business loans, you could do that. You would not need the underwriter. You could just have.
We had recently discussion with J.D. Whitlock from Children's Hospital, and we were discussing using AI in medicine, and the solution that we discussed it, like the AI should prepare the first loose version of the interaction, so to speak, and take notes during the diagnosis and prepare the report, the first draft of the report. Then the actual doctor would modify it a little, check if it's in agreement with what happened, and then sign it. So I imagine that when Artur mentioned that we wouldn't need underwriters, it means that we wouldn't need them to do all of that. They would just have to check the check marks, so to speak, and then let it go. Is the process of checking because it's a very, very I would say specific to financial market, and I know that Artur will still have a couple of questions, but not all of our audience are in financial market. What other areas did you recognize as, everybody tries to cut costs, not to say corners. It's not my mother tongue. I sometimes, mix sayings. Anyway, what areas of opportunity or utilization of data science? And here I'm going back to my initial remark that getting data from paper, PDF, which can be tricky. I know my wife worked in a startup which was trying to unify and put into the portal format the information they were gathering about houses as well for renting or sales. And it was a lot of work just to get information extracted even from PDFs. But let's, as you mentioned, you worked in financial companies which were working on machine learning models to actually try to predict the viability of the product. Like, are there some areas of tightening the operations where you are especially proud of some, machine learning? I'm not saying that data science is machine learning. I'm fighting with this. But like data science, machine learning, some with advanced analytics that really helped. I don't know. You are able to predict how much electricity will be costing over the day, and you just give credits between 6 a.m. and 7 a.m. when it's the cheapest. I don't know. I'm just
in my current environment in mortgage lending, that opportunity exists in the operations of the company, right? And how we go about doing it. It's not really there in terms of, for example, finding new ways to underwrite loans because it's so regulated.
Yes.
And so there's, we use data. I think calling it data science would be a stretch, right? More like data analysis of our current operations to understand where our needs for and our opportunities for improvement are. Where I think there's an opportunity for data science is, as I mentioned, in an expanding market when we're looking at how we're mining our leads and our opportunities to go after additional markets, right? And additional opportunities that we may not be attacking today. And that's very, very interesting work. And in previous places, there have been opportunities in underwriting or in finding, and in the sales and prospecting areas as well.
Marian?
It's your episode. You're the financial guy. No, because because now we touched upon lead generation, and I must say I find it curious because I know that it's a problem for many companies. Everybody wants to sell more. I guess it's not a great of a surprise. What are the data sources? How do you search for leads for something as, I would say, personal as a mortgage? It's not. I don't want to say that everybody buys a house at some point because nowadays not everybody can afford it, but looks like the group is spread across different geopsychological categories. So how do you approach it from even analytical sides? But what data do you use to and how do you, if it's not a trade secret, of course, how do you categorize people to decide who is your target and who is not?
Yeah, so every company has got a different secret sauce on how they do it. But in general, there are a couple of tools that have been around for a long time. The oldest one of those is just understanding your current customer base and where they are in terms of the market. For example, if you have a third of your customer base that have mortgages with 7% rates and the current rate is 3.5%, then you're going to go market those very, very heavily, right? That's easy because all of that data is in-house. The second is when you're looking for triggers, and triggers both on your own customer base and then in markets where you'd like to participate. And so, for example, you can buy the triggers out in the marketplace. So you can buy triggers on when credit has been pulled, when someone has applied for another loan. And so you can monitor your own, your set of customers that way by subscribing to services that'll help you to understand those things. The problem with that is that it's normally reactive. So once someone has decided that the way that the trigger gets pulled, the credit trigger gets pulled, is they've already asked someone else to be approved for a mortgage. So they already have a relationship. And so then you're coming in a competitive situation and saying, hey, we think you might be looking for a loan. Can we help?
And it's probably one of the 20 emails they get this day when this trigger, because the company that sells you the triggers doesn't sell only to you, but to all your competitors as well. So all of a sudden you are in a very crowded place.
Exactly. There are services up and above that allow you to get a little bit more predictive. And for example, you might want to know when a certain set of people, whether your customers or other prospects that you have a relationship with, are shopping for homes. And so, this gets into the data aggregators that are online, where you can buy the data that says these people have been looking on like real estate focused websites. Therefore, they might be good, and they weren't before, right? Therefore, they might be good candidates. They're shopping for a home. They're thinking about it. And so you might want to go reach out to them. Or they might be looking for some other life events, like, they're having kids or something like that. Other things that are triggers in their lives where people tend to buy houses. And every industry has those triggers. And in the world we live in today, we are tracked so much online, unless you're very careful. We are tracked, and companies are aggregating that data. This is how companies like Facebook and Google make money, right? And then selling that data back to people that are trying to advertise it.
I would like to make.
So I think this is a great opportunity to touch upon a very interesting subject of outsourcing, because you mentioned obviously buying data, and we've talked a bit. There was kind of mention of using data services providers, partners for analysis. I wanted to ask you about your view on outsourcing data science. Not just the sourcing the raw data, but actually, ordering analysis to be performed by someone else. Because I see this as a bit of a double-edged sword. One is that if you're outsourcing data science, you cannot really, maybe you can do something slightly innovative, but you cannot do something very innovative. Secondly, you're relying on someone else to actually do the processing for you. And and NDAs aside, there is I've always, as a chief risk officer, as a risk manager, I've always felt slightly uneasy about data processing, data analysis that's been done by someone else. Maybe it's just my innate paranoia, but I always like the data be analyzed as close to me as possible, and using methods that I could understand. If
that was a limiting factor.
Yeah, that was a very limiting factor. Unfortunately, if I then stand in front of a regulatory body and they ask me how was this data analyzed, I can respond without sweating, which always makes me feel very comfortable. So, Andrew? What's your view on outsourcing data analysis and data science?
So philosophically, I'm a fan of outsourcing, but it has to be used appropriately. And in this case, I've yet to see the kind of return that I would hope. Right? Let me tell you. Let me put some caveats on that. First of all, it has to be anonymized. Right? I get paranoid like you do with sharing customer data, and not just from a competitive perspective, but from a data theft and privacy perspective. We take our customers' data security extremely seriously. And like I would be uncomfortable doing that unless my team had anonymized the data. I wouldn't trust anyone else to anonymize it. And so I would be handing over signals and aggregate data sets, or even anonymized individual files, so long as the customer information was gone. Then I could get comfortable with outsourcing. But what I've seen, especially in data science, is that it's different from something like operations, where it's almost like technical piecework, right? Where you're basically driving for a lower, and often like outsourcing, especially offshoring, you're looking for arbitrage in labor rates. And in data science, in my experience, there's not a ton of arbitrage, right? Because data scientists are expensive all the way around the world. And there's some magic in having very intelligent people that understand your problems really deeply. And I have not seen that magic come through with an outsourced partner yet. And I wonder whether it's even possible, to be honest. And I know that there's some really big data science outsourcing companies, and I know that they attract really talented people. But I would imagine that their target customers are really, really big customers that are going to be devoting tens of millions of dollars to the problem. And therefore, they're going to get dedicated talent on that problem. And that I think could work, right? If I were at a really big bank, then I might evaluate that. But for the mid-tier and the smaller tier, if we don't have the resources to devote millions of dollars into an outsourcing team to get access to dedicated talent like that, we would do better hiring our own talent. The magic for me comes when you do have those really bright, really intelligent people that have these aha moments because they're following the data in a way that no one has followed it before. And that is really hard to do unless you're fully invested in the problem and the challenge. And that's hard to do in my opinion, unless you're invested in the success of the company.
You're tackling what we, let's say, discovered some time ago. We noticed that there is a problem. We started as a data science company, and we noticed that we create some models and then they're unused. And they were unused because they weren't embedded into the business process. So what you're saying is that the data scientists, if they don't really understand the process, what you said, following the data as nobody did before, I would add to it, first follow it as it was followed by the people who actually did the business. So it's not about going wild and dropping random variables together and cobbling together as a machine learning model. But this is really interesting because you're one of the very few people we've met who actually deeply understands this connection between data and the process. We usually spend a lot of time explaining that data science is not a silver bullet or magical pill. You take some data, you drop it into some algorithm, you get some answer, bam, everybody is happy. And it's a lot of work. And I'm really happy that our audience can hear it from not only from us, but from a professional working with really sensitive business, that data science requires this investment and understanding of the business. But it's not about technology and solutions. It's about understanding the problem. I must say I'm very, very grateful and very happy to hear that. Because that's, in my opinion, this is something that really had data science as a field. It was supposed to be a way of utilizing the scientific method, this discovery, this understanding of new understanding of reality using data. And it became just applied machine learning, which, as you can hear, I am pretty grumpy about lately.
Well, it's as much like the beauty of it is in the art as opposed to science, right? Because like there are scientific methods to use, and there's a lot of technology, and there's a lot of math, and it's
understanding reality. It's a language describing reality. Yeah.
Yeah, and the beauty is in that creative process and that creative ability, and I know I think it's very difficult to really be successful without that.
So I wanted to counter that a bit because what you said about being very invested, but at the same time I understand that having these very talented and very bright people with plenty of opportunity for aha moments, it's costly, and not every institution may afford it, and not every institution may need it, because there are certain methods, certain approaches, applications that are well understood in the industry. For example, mortgage application scoring there are standardized methods for this. Obviously, as you said, every bank likes to have its own twist and its own secret that will give it a competitive edge. But there are pretty standard methods. Now, I know that Marian will probably start shouting at me that this is not data science, that it's data analysis or data engineering. But there are firms out there that provide pretty commoditized data science like services.
What's wrong in calling it data analysis? Why do you need to call it data science all of a sudden?
Okay, Marian's language purism aside, I wanted to ask more about the kind of cost benefit analysis of those kind of solutions, where that the service is commoditized. It can be used, but at the same time, we've talked about the risk of the security risk and anonymization. I wanted to ask more about your view on risks on using these kind of almost commoditized analysis without fully understanding the implications of what you're buying. Because there may be a small financial institution, they're not really interested in having their own model. They buy an off-the-shelf model from a provider, they send them the data, they get a result, and suddenly everything goes wrong because there are certain assumptions in the model which they didn't understand. They didn't fully comprehend that there are certain nuances that they should be paying attention to. Do you think there is still a use case for those kind of models, or are the risks of not fully understanding what you're buying in commoditized form just too great and you wouldn't recommend touching?
No, I think it's a good point. I think you have to be really wise about how you use it. For example, things that are commoditized, it'd be better to pay other people to do it. For example, the best example I have in my business is I don't need to build the secret sauce on OCR technology. That would be a complete waste of my company's resources, right? It is much better for us to pay a partner to do that for us, whether it's we buy software or we pay an outsourcer to do that, and even like some of the basic data analysis that goes with it. I think it's important to answer that question, though, on a case-by-case basis. I think it's important for the company to understand what its secret sauce is, right? For example, if they're, let's just take like a hypothetical mortgage company, if there were no regulatory environment. So maybe we'll say it's a different kind. Let's say personal lending, right? Unsecured personal lending. Your competitive advantage, the thing that makes you special, might be that you have a different underwriting algorithm from everyone else on the planet. And in that case, your survival depends on being better there than anyone else. And I think you need to hire your own data scientists. Now, let's say that's not your area of differentiation. Your area of differentiation is outstanding customer service. You do underwriting the same as everyone else, and that's fine, because what your customers really want is the individualized customer service that you provide, right? Then you just go buy the underwriting model from someone else. You pay someone else to do it because that's not where you're focused, and you devote all of your innovation efforts on how you improve that customer service experience. And there may be something there to do some analysis, or I think you get the point. But so there's two different focuses, right? Not everyone needs to be innovating on the same things all the time. You have to decide where is your area of focus, and then optimize your capital resources towards innovating in that area of focus.
Yeah, so essentially we're going back to kind of the old adage: start with why, right? Start what is it that you want to differentiate yourself. And so finally, I wanted to touch about something that Marian already mentioned before in this episode, and that is business expectations of visibility. Because quite a lot of time when data science is mentioned, and there are either very exaggerated expectations of, oh, this will solve all our problems because it will give us answers to everything, or there is lack of understanding of the specificity of certain solutions. And we very often hear from the business, oh, just give me access to all the data and I'll see what I can do with it. And there is, you have to almost kind of like with little children, hide the sharp tools and hope they don't hurt themselves with something, because it can be dangerous. How do you approach this so that business really can make use of this, but without the risk that they will cut themselves on some sharp corners somewhere?
That's a really good question, and one that we all live every day, right? It's especially in a world where like data science and the intelligent use of data has become mainstream, right? And we expect the things that we see in our personal life to be just as good in our business life, right? If, for example, if Netflix can predict the next movie I want to watch, why can't my technology team predict the next best action for this customer, right? The truth is, like, we can. It just doesn't happen without an enormous amount of work, right? My approach to this is always to come back to what is the problem we're trying to solve, like to be focused on the problem rather than on the tools. Because there are varying levels of tooling and varying levels of analysis, and it might be that I can get this problem done in Microsoft Excel and it's going to be just fine, and it'll be cheap and quick, or maybe I need to go hire a couple of people with PhDs in decision sciences and spend 6 months on the problem and then come back to you. That we can use both of those solutions to answer the same question. But I would rather be the one that's saying, hey, here's the problem you've presented. Here are a range of solutions with costs to solve this problem. I'd rather have that conversation than have my partners say, hey, I want you to go hire some data scientists, or just give me all the data, right? Because that just, if we're not really solving problems, then we're just playing, right? We're just having fun with tools and with toys. We're not really solving problems. That's my perspective.
I couldn't agree more. It's in my experience, the good old linear regression is usually sufficient in 80% of cases, but the business scratches their heads around, and there's nothing wrong with that. I could build some deep net to the same job, but it would take me considerably longer and require considerably different environment to even run it. So no, I think that our audience should really listen to you carefully, because that's how, in my humble opinion, the proper data support of business should look like. Let's talk about problems and let's try to solve it.
And then solve it using ChatGPT.
That's true. Just drop your client's data there and say, well, what should be my next step?
This entire podcast was done by ChatGPT, by the way. So.
No, almost, because nowadays, if something is not done with, I bake my pancakes for breakfast using ChatGPT. So that otherwise my kids just won't eat them. So I think this is a good place to kind of summarize, because we've touched on some very important topics, and I think that the fact that you should look at the problem and not just pick solutions that are looking for a problem, and looking at the data and making sure that you treat your data with respect, and especially your customers' data, because this, for every business, and especially a regulated business like finance, this is, any loss of credibility in that area. You can have the finest data science, AI, ML models. If you lose credibility with how you handle your customers' data, you're essentially gone. So if people wanted to contact you, learn more about your views, I suspect LinkedIn is. Do you publish any a blog or somewhere where people can read more about your views?
I don't have a separate, like a standalone site. The best way to reach me and to continue the conversation is probably on LinkedIn. And of course, if there's anyone out there who's looking for a mortgage, feel free to reach out. We'd be happy to talk.
We will put a link to your LinkedIn and obviously to First Community Mortgage on in the notes to the website, to the episode. And as usual, let's hope it was of use to someone. Thank you for listening.
Also, don't miss the next one, where we'll be talking about cybersecurity and cyber resilience to Amit Basu, Vice President, Chief Information Officer, and Chief Information Security Officer for International Seaways Incorporated.
Subscribe on your favorite podcast platform or visit bdr.show to find out more about future episodes and guests. You can also check out cognition.llc for more information on Cognition Shared Solutions, our services, and other events hosted by us.
For now, it's thank you from myself, your friendly neighborhood data guy, Dr. Marian, and my co-host, Artur.
Thank you.